So, yes, final hour. Yeah. Okay. So, yes, I just want to repeat again because it's very important concept. Is that you will try to use the regression to estimate the theoretical number. Actually, this tag is really frequently used to in your master's thesis. Okay, so yes, let me introduce again. Okay, so actually, this line comes from CMPA model, right? Maybe I moved too fast, so I will go to it again. So this line, the equation is like this one. Okay, so this line is this equation is exactly how we see this straight line. Okay, and there are a very important property of the regression is that we try to use the OLS, the optimal least square, right? Right? So we can say that based on this equation, or based on the regression line here, the number is the theoretical number. I mean, it's the same concept. The point here is, well, after we estimate this line, and then we just plug the 1.2 in this line equation, then we can have the 15.6, the effective return. Okay, so why here we can say that if 17 greater than 15.6, then the term is underpriced, because we treat this 15.6% is the benchmark, and how, and where we can get this phone number, it comes from plug the beta 1.2 into the value of 1.2 into this equation. Okay, so again, if we believe that the regression is the good tool, the regression is the perfect tool, and so therefore we should believe that after we estimate the regression equation, and then we put the real beta here, then we can have the y value, and this y value is the theoretical number. Okay, so why I said that this tag is very important, because in the S pricing or in the finance area, we need to define that what is good, what is bad. Okay, so the benchmark is quite important, become very important. So this is the most simple way to help us to define the benchmark return, and we usually also call the market model. Maybe we can discuss more in the event study part. Here, I just want to build out your basic concept. Okay, if we trust if we believe the OLS is good, then we just follow the intuition of the concept here. Okay. And also, what's the difference between the regression and the AI? We know here we have a lot of AI model, right? A lot of ML model. Actually, the only difference is that we try to change this straight line from straight line to maybe the curve line. Okay, so I just with me, because OLS comes from we confirm that each point to this line is the minimum distance, and then somehow we estimated the coefficient value. But in the AI area, we just change this straight line become the curve to fit all the data points. Okay, so if in the future, if we have any chance, I can actually show you how to use the equation line and aggregate each other. Then we're going to change this straight line become like maybe the other curve, yeah. Maybe like the 10, like a sigmoid function, something like that, yeah. In the future, if we have time, I'll show you. But at least so far, at least right now, you need to, I hope you can have the idea of how to use regression to estimate the theoretical number. Okay, because we believe this line is good. Okay. Okay, therefore, how to compute the beta for each friend is quite important, especially for the math student. So in the final hour, I prefer to show you how to download data, where's my data comes from, and how to use the Python to do so. Okay. So here is a download from the TJ platform. All schools have a TJ, right? Yeah, so yeah, you can apply the TJ account, and I just show you how to the setting of my data set. Okay, so for example, here I select the adjusted price, and here ROI is the return. Okay, return of the investment. I remember that, and the target. I choose all the listed firm in Taiwan. All listed firm in Taiwan, and you will set up your period here. I select the 2025-10 first to 2025-12 December, end of December. Okay. And yes, I have the company separation and the date separated. Okay, and the type, yes, usually TST and CSV. The Excel, I do not recommend you use the final one, because the XLS has a limited the data length. Okay, so when you yes, if you want to do some investment research, you should choose the TST and CSV. Okay, then your data will more stable. Especially in my experience, I do some market microstructure data. So which means that we focus on the transaction data. Okay. The original data set should be maybe around 1 TB. Yes, so if in this case, if you use Excel, you cannot use Excel, okay? The type you can only use it maybe the TST. Or JSON? JSON is good. Okay? So yeah, depends. It depends. If you want to do the investment, okay, the first two is okay. If you focus on corporate finance, because yeah, for corporate finance, the data of corporate finance may be just 10,000 around. Yes, I mean usually, or 100,000. That's it. However, in the investment, usually billion, trillion, or larger. So yes, the data type. Any question? Okay. Yes. And this is our market data. Market data in the TJ, the code is 1999949. 1999. Yes, the market return. Market return. Okay, the same period, the same and the sensation. Okay. So now we have the data, and I already upload to the sorry. I already upload to the data and coding week 3. Okay, so if you want to replicate the coding, or you want to run the coding by yourself, you please just download this data in your laptop, and then we can begin the coding. Okay, so the first block of the coding, the first cell of coding. Again, we try the first step when we use the real data. The first step always the upload raw data. Okay, upload raw data. So in the coding I provide you, and you can just use directly and run the coding. Yeah. Wait a second to link to the yeah. And then select the file and stack region. Yeah. Stack region here. And then you can see the coding is wrong. Okay. Intuition for the first part. We already introduced in this in last week. The first one is to select which file you want to upload, and the second one is to detect or to decide which encoding you use. So encoding means that how the computer or how the program read your file, okay? And then read the file into the DF, the Panda, because in the Panda we usually use the data frame. And what's the data frame? You can just think about like the data frame just like the CSV sheet, okay, CSV sheet, okay? So yeah, after we finish upload, we can see this one. Okay, we can see this one. Okay? Intuition? Intuition? No? Yeah? And yes, next step we can try to sort by a step by ID and date. Yes, so we sort this data frame we call originally we call this data frame the name is stuff. Okay, so here we sort stuff by ID. This column, the column here ID, and the year month date. Okay, then we can see that actually this data is daily data because for each firm and each day we have one observation, the daily data. Okay. Okay, so now we have a stack return according to the formula here. According to the formula here. Now we have this one, ERI. Okay? And the next step is we need upload the market return, right? Market return. Okay. So again, upload the market return. Market, this one. Yes. Then you can see that the format of the market return. Again, is the daily return because 2025 October 1st, yeah, we have one observation. Yes. Okay. No. Okay. Again, we sort the market return by core ID, year, months. Yeah, similar, but yeah. So now the first step to run the regression like this. To run the regression like this. The next step we need to merge the data into we want to use in the same row. What's it mean? Let me finish the coding first, and I want to explain to you. Yeah. Okay. Yeah. Okay. So this is the final data set we used. Okay. So before we have this one, the first step I usually call the merge data. Okay? So how to merge the data? Because because the market return is only time series, right? Because the market return in the same day should be the same, right? And the stack return can have a different stack return. So today, if we want to combine the market return and the stock return, we should merge each data set by year, month, and day. Because for each firm, even we know that the stock return is different for each day, but each firm will have the same market return in each day, right? So that's why here, let me show you this one. We try to merge two data sets, stock and market, by year, month, day. And how to merge? In the merge. This rule need to exist in both data sets and merge each other. Or you can see that we just horizontal mapping the data. Okay. So the final data set look like this one. Okay. Or the other way to prove whether we are correct or not, maybe we can just sort the data by date. Yep. Because now I resort or I sorted the data set again now by year, month, day. So we can obviously to see that the same day, the different return in the same day has a different stock return, but they have the same market return because we merge these two data sets by year, month, and day. Okay, so actually this step is quite important because maybe in your math synthesis you have two different frequency data. For example, now you have a monthly return, but the fundamental the standard data is annual. How to merge it? How to merge each other? I don't understand. So now again, you have your y variable. Your y variable is monthly return. Okay, and your x variable will always run regression. Okay, maybe it's the revenue. Maybe okay ROA, and there's annual ROA. So now, if you want to run the regression, the IT by alpha plus beta ROA TI, okay, and TI plus epsilon TI, and this one is annual, and this one is monthly. How to merge data? If the x and y would have the same frequency, it's easy, right? However, sometimes, especially in the investment area or if you have a Henkel data, the frequency may not the annual or daily, right? So how to do that? How to do that? So in this case, we usually merge by firm ID, of course, and year. And so which means that the same return, the return in the same year will merge to same statement information in the same year. Okay, so just like this one. It's similar to this one. If you can imagine that Now, here is the monthly return. It's from January to December. The return maybe is different, but the fundamental information, like the statement information, will remain the same. Okay, so in this case, we need to merge the data by from ID, year. From ID, year. Okay, yes, it's more difficult, but the difficulty, but what I want to told you is that how to merge the data. The most important thing is that how to merge the data depends on your purpose. Depends on your purpose. Okay. So yes, if in the future you struggle in this kind of question, maybe we can discuss directly. Okay. But now here I just want to tell you how the basic data concept to merge the data. Okay. Any question? Any question? Because the code is easy. So I prefer to told you the other detail. Okay. Okay, so now, yeah. What I need, right? Well, I forgot the name. Yeah, this one. Okay. So now, in this step, you can say that we finished to prepare the data set. Okay? Actually, in your math synthesis, you need to compute the variable you used first. And no, upload the data, raw data, and collect the data set, compute or copy your proxy variable, BN ratio, ROA, ROE, a lot of variable here, and then final step is to merge the data. Merge the data, your X variable and Y variable. Okay, so in my opinion, in my experience, I will always ask my math student to finish this data set first. Okay? And after you have this kind of data set, then you can do following analysis. Okay? Any question? Okay, so now, yes. Yeah, how to confirm your data set is merged correct or not? You can just think about that. If we merge the data successfully, the Y variable and the data and the X variable will just like the expression. So I mean that the equation like this one, right? So the Y here is stock return, firm stock return. Okay. And the only X here is the market return. Okay. So you can check by yourself. For first observation here, the stock return is negative 0.8%. Is your Y variable, and the X variable here is market return. So how to identify whether you are correct or not? Just check by your own. You can just check the structure of the data. Actually, this step is very important because a lot of math students just bring their tab and ask me, "Why, Professor, I cannot run regression?" And I just see at this final data set, and I will told you, yes, you are wrong. You are not merged correctly, so please check by yourself first. Okay, so just look close in your data. Just please in advance, okay? if you have question. Okay, so now final step is to run the regression. Yes. Okay, so the first step, we try to confirm the core ID is string. Yes, this is just a detailed tips, okay? And we could add the result list to maintain our regression result. So, because I want to we want to run this equation firm by firm, right? For each firm. So obviously we need to use the for loop. Okay? We iterate all the firm ID in our data set. Iterate is we'll just put each item in our box one by one. Okay? So we yes. And then we just assign our y variable is duck return. Yeah. We need to know that. I assume the if is 0. Okay. The y variable here, x variable here, and also we need to add constant. Okay. Then we run the regression. Yes. We'll spend some time. Yes, like this one. Okay. Yeah, these two represent. Okay, so now we have a result. So for example, for this one, for the first observation here, so which means that for the component 1101, the constant is this term. We have this value. If we run regression, so definitely it's different. Okay, I was one told you. Okay, and the beta here is 0.336. Okay, therefore we have all the beta based on CDA model. Okay, so maybe we can just summarize the beta. So here we have 1,055 firm in this period. So that's why I told you, in average, if we start from maybe 2008 or 2000, early 2000, the average firm number in Taiwan should be 800. Currently, maybe more than 1,000, but in the earlier period, only maybe 600 or 700 firms, this different. So in average, maybe 9 or 800. Okay? And the mean value of the beta is 0.4. And the maxima is 2.6. Okay, so here I just show you how to prepare your statistics table, and which is my requirement in your final report. Right? You need to finish the team project, right? And one of the requirement table is summary statistic. You need to tell me what the variable you use, the shape of the variable you used. So of course, you just show me like this. When I get the table, okay, your mean value of your x variable here, or your result here, the mean value is 0.43. And the standard deviation is 0.43, and minima is negative 63, something like that. Okay? So now I have a question for you. Why we need the summary statistic? Because when we look at the result here, we can find that the beta is, the mean value is 0.42. So the data here, the result here is okay or not? Why? Why? Or my question is that why the average beta is not close to 1? Why? And obviously the maxima is 2, the minima is 0.6, right? So it's not the balanced shape, it's not the bell shape, okay? So my question is that whether does this result is common or not, is correct or not? And why? Just look at the results. That's right. Just look at when you do your thesis and when you finish your final project. Just look at the data. Just look at the results. And based on the data and based on the results to produce your story. Actually, for me, is the way to prepare your match thesis. Okay. So why? So first question is that mean value 0.3443. It's okay or not? Or we should expect that the mean value should be very close to Z1. No? Or maybe something wrong here? Answer is it's okay. I have several reasons. The first one is that our period is not long, right? We only focus on 2025 January, October to December, right? Only 3 months. Okay, the second issue is that who told you the mean value of the data should be equal to 1? No. Okay, so actually, I will ask the students to provide the summary statistic because according to summary statistic, we can know a lot information of your thesis, of your term project. Okay, so especially in the mean, median, no, I'm not sure median, in the mean and the standard deviation. For example, if now we see that the mean value is 0.43 and the standard deviation is 3, definitely you got something wrong. Because we know that the mean value is 0.4. How come you can have the standard deviation maybe 3? Okay? So yeah, here I just want to told you, please, in your team project, provide the summary statistic for your data set, for the variable you use in your team project, final project. Okay? And believe me, when you meeting with your supervisor, and yes, please check your data first, because I have a lot of experience. Not only here, I meet with the NTU student, NYCU student, yeah, a lot of students, and then when I just check, the first step how I meeting with students, the first step is I want to check the summary statistic. Okay, and the first time meeting, maybe 80% student will got it wrong. You okay? So please show your summary statistic. Okay, that's it. Any question? So in this week we have already introduced. We move from the relationship between the rate and return, and now move to the CAPM model. And in short, why we need the CAPM model? Because CAPM model can measure the systematic risk. And again, it's still high risk, high return. High risk, high return. Okay? Yeah? Any question? Any question? No? If no, we are finished. We finished the course in this week. And now let's take a look. Okay? Okay. Please scan QR code. It's okay. You can select it. Okay. So I will call the name again.
老师，不好意思，我还没有那个还没有找到。
This okay.
这条是。
Okay. So, oh. Yeah, this is Chinese student, Zhang Yuanwen. Zhang, okay. 举手，往上。Yeah. 晋嘉 ，OK。嘉宇 ，OK。陈静 ，OK。Yeah. All students, yeah. Okay, so if you have a question, please come with me, and if not, yeah, you can leave it now. Yeah. See you next week. Bye bye.